let's have a look at the US dollar Japanese yen currency pair. The pair tested the lowest level since the end of November, but then managed to recover. The Bank of Japan had to increase its buying in the super long bonds on Friday in order to keep rising yields in check. Such policy is reining in the yen's appreciation, but at the same time, some experts are concerned that it may become difficult for the Bank of Japan to take any easing measures in future, and an idea that will likely limit the dollar yen's ability to strengthen. So we can now see that dollar yen is trading inside this big Ishimoku cloud on the daily chart. The top of the cloud is located around 116.90, while its bottom is at 109.90. We are now in the middle here. The pair is also between 50-day and 100-day moving averages. 100-day average is having the bullish bias. So we think that after the pair managed to return above 112.35, it may try to test higher levels around 115.50 and 116. There is some seasonal negative pressure on the pair because of cash repatriation of Japanese yen by Japanese investors. But if the market remains optimistic about Donald Trump's policies and about the US dollar, then the pair will have a chance to get higher. The meeting between the US President Donald Trump and Japanese Prime Minister Shinzo Abe went rather well. We didn't hear the critics from Trump about the levels of Japanese currency and the fact that Japan is trying to make Japanese yen decline deliberately. On the other hand, Trump sounded rather peaceful, and this helped the US dollar. Also, we can see that the pair is now trading above resistance line of January, and if you look at the daily chart, but we still haven't seen a Japanese candle close above this line. So conservative traders might want to wait for the confirmation. On the 4-hour chart, the pair is trying to settle above the former resistance and now support line. Still, we can't say that the pair is having significant bullish momentum, and any attempts of the US dollar to get higher towards 115.50 will likely be very, very difficult. As I have mentioned that there are seasonal and other factors which are acting against the US dollar versus Japanese yen, then if you like to have a bullish bet on the US currency these days, probably you would better like to bet against the single currency than against the Japanese yen. So trading euro dollar looks more simple and technically, well, better defined than trading US dollar Japanese yen. At 1-hour chart, we can see that moving averages are having a bullish bias, but MACD indicator doesn't confirm these recent highs. So the pair is facing the first weekly resistance at 114.16, and it will take some time before dollar yen will be able to get past this resistance. Maybe some kind of wedge will take place, and then the pair will once again test the weekly pivot and now support at 113 mark. So the main idea is that the pair is consolidating above the former resistance line from January in the area of 115, but below significant resistance at 114.16. And some further resistance levels are not far ahead for the US dollar Japanese yen.